Wednesday morning trading session. My name is Eric Senft, and thank you for taking the time to join us here this morning. Hold on one second. I will get you my monitor. Okay, the market's just opened up. And bear with me here a moment. Okay. For those of you new to our trading room, what you're looking at here is the diversified trading system. And it's diversified because, well, we're looking at the market from 3 different points of view. Just really quick here, in the top left, we have the Hawk Scalper. Top right, we have the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This one is called the Raptor. And the Raptor is actually a tool which incorporates elements of the other 3 tools all into one chart. Okay. The markets you're looking at here are the NASDAQ. I'm also following gold and crude oil, but I would be happy to take a look at any market which you're interested in. I'm sure there's probably a few e-mini traders in the midst. Signals all develop the same way, regardless of the tool that you're using. Let's take a look here at the Hawk Scalper. When the signal first begins to print, we get a warning dot and an audio alert. And once the signal is complete, we're going to get a triangle and a hash mark. Now, you're going to see, on some of the tools here, like the Hawk, we're printing an awful lot of signals. We don't necessarily take all these signals. There's certain signals that we're focusing on. For instance, down here is a red bar buy. This is what we call a first micro-macro cross signal right here. This is what we call a macro pullback signal. So you can see there's certain signals that we're going to look to take. And this is true for all the tools. They have their unique set of high probability signals. All right, we'll just let the market sort itself out here for a moment. It's only a couple, 3 minutes into the session. Let's take a look at the overnight. I can see here on the Eagle, not much happening in the overnight. So the market closed right about here yesterday. Very nice red bar buy signal here off of the hard edge. The Eagle, we followed this band. This gives us our directional bias. And whenever the market encounters the hard edge, we expect some sort of reaction. This red bar buy, where we're getting red bars with a buy signal, is actually one of our high probability signals. You can see that had pretty good follow through in the Asian session. Then here, just before the London Open, we got another red bar buy. That one not quite the follow through as the previous one. Struggling a little bit, but we'll see. We'll see whether the NQ is going to try to head lower or not. Thing about the NASDAQ, every time I try to short it, it makes me sorry I did that. Oops. Okay, you're getting a request here for the E-mini, and I'll be pulling that up for you shortly. Right now, the buyers and sellers still fighting it out, trying to get control of the market. All right, well, while that's going on, let's take a look here at the Raptor. The Raptor, as I mentioned, is sort of a blend of the other 3 tools, kind of a hybrid, if you will. So it's going to incorporate elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader. Again, the overnight, a little bit quiet. Here was the London Open. Yeah, got a little bit of a trend change signal. Got a nice hard edge bounce right here. You can see this cloud that's on the Raptor. We've actually got a double cloud going on the Raptor. That's borrowed from the Eagle. The whole Eagle trend trader is programmed down into your filter here. And typically when we hit the hard edge, again, we anticipate some sort of reaction. And the market currently struggling with the highs. This tool that you see right here, this is called the Geiger counter. This is one of the add-ons that you're going to see here today. And if you would like more information about any of these, just a moment and I will get you the link where you can go and find out about them. And these add-ons that I'm showing you, these work on any market. All right, so I put the link in the chat window there so you can follow up on that at your leisure. The Geiger counter is essentially a tape reader. So we've got the histogram here. We can see what the bid and ask have been doing, but we've also got this dial around the Geiger counter. This is very useful when you're hitting a support or resistance area or initiating a signal, as we did here with the Raptor. Notice we're at these highs. We would anticipate this wheel, there we go, to be full on hard over to the green side and not waffling back and forth. You see how it's stuck here on the red side now? That tells me that there's a whole lot of selling pressure, that the sellers are just chewing through those those orders on the short side. Now it's a little bit more balanced again. But when we're here initiating an order or against a resistance level or bouncing off of a trend line or something, it's sometimes a very early clue as to the immediate short-term direction the market might go. All right, so we'll put that back up on the shelf for now. Again, it's still early. It's only, what are we? We're about 5-6 minutes into the session now. Oh, and I'm getting a question here about the chart style. And John's asking, can we take a look at the 30-year bond on the Raptor? Absolutely. Okay. Some of you will have noticed that these bars are a little bit wider. Some are narrower. This is the dynamic equivolume bars from Indicator Warehouse. These are actually brand spanking new. They only came out 3 weeks ago. Equivolume, for those of you who are unfamiliar with it, will print the bar relative to how much volume is associated with the bar. As you know, volume, a very important indicator of what prices are likely to do. And so you get a very quick visual here. This again is an add-on. This will work on any chart style. So it doesn't matter if you're using a time-based chart, tick charts, the mean wrinkle bars here that I'm using from Indicator Warehouse. It will work on any other chart style, with perhaps the exception of charts like point and figure, stuff like that. All right, let's take a look here then at the E-mini, and we'll pull over the E-mini here. You're going to see it's fairly neutral at the moment, kind of giving us the same sort of mess as what we're looking at in the NASDAQ. No real surprise there. So this is the hawk, this is the scalper. You'll see we got lots of yellow bars. That's indicative of a sideways market. Whenever you start printing a lot of yellow bars, The caution flag should be coming up. We are trying to make a move here to the downside though. You can see we've had a lot of volume. We've broken this support right here. Right now we'd be looking for a retest. We've had our test. This is what we refer to as a test and a retest. So we'll see if we can't get that bounce, perhaps generate a first micro macro cross signal to the downside, which is our high probability signal. But right now, nothing really going on the E-mini, at least not on the Hawk Scalper. Let me bring over the Falcon Swing Trader here real quick. And you're going to notice, hold on, I'm just trying to multitask here. Oh, these blue dots here, before I forget, these are our stop strategy based on the Trade Manager, which is this tool that you see right here. This is a very, very important tool. I could take an hour and just describe this tool to you here. But we've got 16 different stop strategies to choose from with this tool. They're all customizable. These blue dots represent where our stop would be. I'm just going to disable that to clean up the chart a little bit. Oh, we had a trend change signal and a late filter entry here on the E-mini just a few moments ago. The late filter entry signal, this is a signal unique to the Falcon, occurs when the trend line changes, or pardon me, when the filter changes color, but the trend line does not. So you see the trend line stayed the same, filter went out of sync, came back into sync, we generated a signal. That's actually a high probability signal. And I've stretched my profit objective here a little bit for the E-mini, but we would have already hit our high probability target, which is about 8 ticks away. So let's see, that would have been, we'll pretend this is going on real time. So we would have shorted there. There's our hash mark, our suggested entry. There's our stop, and you can see no problem hitting our high probability target. Very often the market will react after hitting our high probability target. Just a little something to keep in mind. These lines that you see on here, these are again a system add-on. This is the Ultimate Support and Resistance Suite. And these are our support and resistance lines for the day. No, they are not pivot points. No, they are not Fibonacci levels. If they happen to coincide with a pivot or a fib level, it's more by coincidence than design. The orange line here is our median line. That's right in the middle of our assortment. That tells us we've got 10 lines above, 10 lines below. This first blue line is our primary resistance. The blue line below is primary support. These three lines tend to be the strongest on the session. They kind of frame the way the day is shaping up. And then if the market gets outside of those, then sometimes the market tends to be a little bit more bullish that day. Or if it gets below the underside of it, well, which it did not yesterday. I'm trying to show you an example here. Oh, here we go. So if it breaks above the primary resistance, stays above there, then the market tends to remain bullish. And you can see how the lines were fairly accurate as regarding profit objectives and stop placement and so on. So we've just broken the median line. Very likely that we're going to try to settle here near the primary support, probably get another little bit of a reaction. But right now, the E-mini looking a little more bearish, at least on the Falcon Swing Trader. Here's the Eagle Trend Trader on the E-mini now. And we too have made a move lower here. This is kind of nice. We've made our test to the extreme. This is a rather big one. There's our test of the extreme. We folded over. Oh, actually, we've made a rule of 3 signal. This is our counter trend signal. But, you know, to take this rule of 3, I would have felt a little better had I had a more recent test of the extreme. Give me a little bit more recent test of the extreme. Then I will take a look at shorting. And we should see some sort of retest now. The cloud has turned over. The market is likely to retrace a little bit, get into that cloud, and perhaps offer some resistance, after which we'll take a look at perhaps taking a short signal. But the stock markets have been very, very strong of late. Like I said, every time I try to sell it, they turn around and spank me one. So here's the E-mini now on the Raptor. I need to adjust the settings a little bit here. The default settings work for almost all the markets. Unfortunately, the E-mini is the exception. All right, so, pardon me. So here's the E-mini, again, bouncing off of the support line. I've got my support and resistance suite here on this Raptor. Oh, I forgot to load my trade manager. There we go. And we're encountering the hard edge. You can see the bar is getting a little bit wider, so we know this is going to be a pretty popular area. See a little bit of a hiccup here, maybe get back to the median line, give us that retest, and maybe a failure signal. But right now, the Raptor a little bit more bullish on the E-mini. We'll see how that plays out. You can see the histogram. We had a couple islands of trading here. The buyers and the sellers pretty evenly matched. They absorbed all the selling, and that would have occurred here at the lows. That kind of tells you that the market's going to turn when you get those types of islands going on. And a little bit neutral at the moment. Yeah, the buyers and sellers taking turns. A lot of buying pressure there for a moment. Here come the sellers now. No, they're pretty even still for the most part. All right, so there's the E-mini on the Raptor. Oh, before we leave this, let's take a look at the 30-year bond. John wanted to see the bond on the Raptor. Now, with these instruments that start trading at higher tick levels or tick prices, sometimes we need to do a slight adjustment. Oh, that's not looking bad. Again, I've got the support and resistance suite on here, so if that gets a little bit confusing, let me know. I can certainly eliminate the lines. But here too, we're stuck between the primary resistance and just shy of the primary support, pretty much skewered by our median line. But the bonds looking like they may put in a little bit of a rally. You see, we've made a slightly higher swing low. We've broken through the highs. So this is push number 1. We know we can normally anticipate 2 moves in the direction of the breakout. So we'll see if the Raptor comes back here with a soft edge sell, or pardon me, a soft edge buy signal. We might try to buy it, trade it up here to the hard edge. That would be our objective. See this type of thing here. This is what we call a soft edge buy. Generate a buy signal. Essentially, it's counter trend. So you're generating a counter trend signal with anticipation that the market's going to retrace here to the hard edge. Our Geiger counter, there you go, the needle's turning green, which suggests a lot more buying pressure. at the moment. Our trade indicator, this little envelope around this current bar, also suggesting a little bit more buying pressure. The dial is turned hard over here to the sell side, though. We're going to see some sellers step up here in a moment. Oh, there we go. This is what we want to see if we're looking for a move higher. Just want to see that the buy orders, the buyers just chew through all those orders. And that should give us a little bit of a move to the upside. All right, so we'll put that back on the shelf for now. John's asking, what do the different colors of the lines on the support and resistance suite represent? The gold line is the median line. You've got 21 support and resistance lines. So the gold line kind of gives you your reference. You know this is right in the middle of the whole assortment. It also tends to be a very powerful line. If the market is above this line, you're going to be slightly bullish. If it's below this line, you're going to be more bearish. Now, the further you are above or below this line, the more bullish or bearish the market will be. The blue line above is primary resistance. The blue line below is primary support. These three lines tend to be the most powerful lines every day. Once the market gets away from these lines, then you're going to see more of a trend developing. So you see now we've encountered the primary support. We're getting a little bit of a reaction here. And then we get the green lines above, which are secondary resistance lines, the pink lines below, which are secondary support. Typically, when the market breaks the support level here, let's say we're looking to sell today, it's going to move two zones. So there's zone 1, there's zone 2. So 60-90, I'm going out on a limb here. If the market breaks to the downside, 60-90 is going to be our first target. Well, 4,700 is our first target, but 60-90 is likely where it's going to settle before we get a bigger reaction. And vice versa, if it happened to the upside, we would go two zones, so we'd be looking around 47.50, give or take a tick. Okay. Oh, well done, Mark. Mark says, good confluence on the NQ this morning. He just took 2 trades between the Hawk and the Falcon for 20 ticks on both. Nicely done, Mark. So I'm assuming, let's take a look here at the Hawk. Mark probably took this first micro-macro cross signal right here. This is one of our highest probability signals, very good follow through, into a macro pullback situation. We'll look at that one in just a moment. And had a corresponding probably trend change signal right here. Came a little bit late, got a little bit of added resistance right here off the median line. You can see they bounced up, hit the median line, traded a little bit lower. All right. So looking for that reaction now, let's take a look here at the Raptor. Oh, the Raptor also produced a signal. It's too bad it didn't produce a little bit higher here. Typically, when we get these cloud crossovers and the market sneaks back into the cloud, we generate the signal a little bit higher. All right, let me show you how some of these tools work. Let's see if we can't generate a signal just missed out on the macro pullback. Okay, we're into some support here, so don't follow me into this trade. I'm going to do this more for demo purposes. Okay, we're getting a trend line touch signal here. So you see we got the warning dot, the triangle, the hash mark. We've printed the signal. I'm going to frame it just like this. And what I'm going to do is I'm going to, no, I'll leave my stops off initially. So with the trade manager, you can see I can preset my profit targets. Right now, I'm just going all in, all out on target. If I was in a position to take more than one contract, I could split up how I wanted these contracts divvied up at specific profit targets. No, they're going to retreat here from my entry. I suspect we're going to see a little bit more of a reaction here. So that's why I mentioned if you're looking to follow me in on a trade, this might not be the one. Producing some green dot signals here, that's definitely making the market a little bit more bullish. And yeah, we're going to retreat from that. All right. What I wanted to do is I wanted to show you how the trade manager works, how it rolls your stops, but we'll just have to wait for a subsequent signal. Looks like we're going to get a little bit of a reaction here. So, pardon me. This is what the market's been like the last few days too, just kind of snooze fest. All right, well, here's another macro pullback signal. The signal just printed, but I might be able to still get in on that one. We'll set it up like this. And let's see, where are my stops at? My ATR stops are over there. No, my stops are still against me. Okay. So you can see here with the macro pullback signal, as soon as the signal engages, I get my break-even trigger. I've got my stop loss, or pardon me, my stop loss up here, and my profit target. And what I'll do is I'm going to disable the profit target, see if we can't run this out a little bit so that I can show you how the trade manager will roll your stops for you automatically. We need to see the market move a little bit in our direction. And then what I'll do is I'll flip it over to the parabolics. Come on, just get a little bit lower. You can do it. Here we go. Okay, and I'm going to disable the break-even trigger too, just so I can demonstrate the how the parabolics or any of these stop strategies will manage your stop for you. Okay, so there we go. I'm going to enable. All right, so now what you're going to see, providing of course the market heads a little bit lower, is the trade manager is automatically going to roll my stops for me. So there you go. It moved it a little bit. There you go. So what this allows you to do really is look for other trading opportunities. So this is how you can monitor different markets. You know, if you want to see what's going on in crude oil or gold or the E-mini or the bonds or whatever. Oh, it looks like we may have caught a nice little run. I'm going to force the trade to break even, although we're almost there. So I'm at break even plus one. So even if we see a massive reversal here, at least my poor broker will get paid. Deb asks a good question here. She asks, out of the 4 charts, darn it, stinkers. Well, we would have hit our high probability target had I not taken it off, but still, that's not right. You're not supposed to reverse that far. Oh, well, at least we got a break-even trade out of it. So Deb asks, out of the 4 charts, which do you look at the first for an entry? Well, you see, this is a different concept for a lot of people. It's not like we're looking at, you know, say a 5-minute chart and a 15-minute chart and a 30-minute chart. That's kind of a rough approximation of what's going on here. But these tools have actually been programmed to pick up on specific market environments. You know how when you're trading, one day your signal works fine, the next day you can't buy a trade? Why is that? What's changed? Your signal hasn't changed, but the market environment has changed. So these tools actually, while they will often be in sync, and sometimes the strongest signals come when they're in sync, because that usually suggests a trending market, that isn't necessarily, or that doesn't necessarily have to be true in order to take a signal. So for instance, the Hawk Scalper is going to generate a signal regardless of what's going on in the Falcon Swing Trader, the Eagle Trend Trader, or the Raptor. Likewise, the Eagle, if the Eagle senses that a trend is building, it's going to produce a trend signal independent of what's going on in the other tools. So you're going to see that they develop signals differently. Like right now, well, we don't really have a signal going on any of them. We're just kind of in that limbo phase. The Falcon may be working on a trend change signal here. You can see our trend line color starting to change. Our filter has flipped over. We don't have a buy signal just yet. We need to have a little bit more structure there first. Now the Hawk is producing a green bar sell. Oop, the dots disappeared, but that was actually a sell signal. So the Hawk Scalper for a moment there was suggesting that, all right, we may get a short-term scalp to the downside, but that's since dissipated. So we're getting lots of buying support now off of the 47-ish area, which would be expected, I suppose. Robert is asking, I thought the Raptor was an all-in-one system, but now you're mentioning several add-ons. Well, the add-ons are just that. They're just add-ons. These add-ons will work on any chart. I just happen to have the Geiger counter here on the Raptor. I just happen to have the support and resistance lines on the Falcon. I have a trade forecaster tool on the Eagle. You don't need them. You don't need them to generate a signal. Oops, I put that over there a little bit too far. Oh, broke something. Okay, well, we'll pretend it's not there. There we go. You don't need them to generate a signal. But for instance, the Geiger counter was developed because one of our members said, I need help deciding whether or not I want to stay in a trade or whether I want to get out of a trade. So for instance, let's say you took this soft edge buy signal right here, and now you're into the hard edge. Do you want to try to stay in this trade a little longer? Do you want to try to get out? Well, look at the Geiger counter was full on here to the buy side. So maybe you'll roll your stop, to break even and take your chances that the buyers are going to come through. Likewise, if the meter all of a sudden goes hard here to the sell side, you may choose just to punch out with whatever open profit you happen to have. So do you need the Geiger counter to trade the Raptor? No, not at all. Everything you need to trade the Raptor is right there. If you don't want to have the Geiger counter, you certainly don't need it. Same thing with the support and resistance suite. Right? You don't need to have that either. I just pointed out because people ask, hey, what's that funny looking dial thingy that you have on your chart? Or what are those extra lines you have on your chart? Here at the Eagle, I'll show you the last add-on or one of the other add-ons. This is called the Trade Forecaster, and it tries to, it tells you what your current market environment is, and it tries to forecast what the next one will be. So right now we're in swing mode, and in about 5 minutes time, it says we're going to be moving into scalp mode. Oh goody. More choppiness. Well, here we're getting a first micro-macro cross signal now on the Hawk. All right, this is one of our high probability signals. I'm going to risk it right down here below the low. The reason is the market is very much in a downtrend this morning. You see that? So this is essentially a counter trend signal. And it's now into yellow bars, so I can scrub that. Yellow bars on the Hawk are a no-no. Igor is asking, what's the first micro-macro cross? That's a signal that's unique to the Hawk. And just a moment, I'll get you a little bit more information about this here so it makes more sense. So each of the tools have their high probability signals. So for instance, these are the high probability signals for the Hawk. So out of all the signals, these are the ones that we're concentrating on. So the first micro-macro cross, strongest signal on the Hawk, occurs after the change in trend when the micro line crosses the macro line, and it's the first signal where everything is in sync. So we got green bars, green signal, green trend lines, green filter. The macro pullback signal, very similar. Everything is in sync except the micro line. The micro line goes out of sync. Then we have what we call a 4-arrow consolidation, where we get the market kind of moving sideways or pulling against the dominant trend for 4 signals, and we take that 4th signal. Then we have a post 4-arrow consolidation or another macro pullback. It depends on how you want to view this one. And then we are looking for our red bar buy, or the downtrend version is called the green bar sell. And this one can be either taken with trend or it can be traded counter trend. So you have an option there. So the first micro macro cross signal here would have occurred right here. Micro line crosses the macro line. This is the first signal where everything is in sync. And it's a very high probability signal. So we had another first micro-macro cross signal here, but now to the upside. See, the micro line crosses the macro line. Everything is green. Bars are green, signal is green, filter is green, but it didn't engage the signal, which is why we didn't take it. We got into yellow bars, scrubbed the signal, and now we're waiting for the next one. And, oh, here we're getting a sell signal on the eagle. Let's see if I can still catch that. We're currently against the ATR line. I'm going to take this one on a second push. The second push is simply we let the signal engage and retreat from the signal so we know the extent of the current bar, and then we let the fresh momentum bring us in. This squiggly red and blue line is our ATR line. A lot of times I'll use this as a filter, but I know you're anxious to see how these things work, so I'm going to try to take a signal a little bit earlier if it engages. All right, so there we go. Now, typically what we would do is this current bar which is forming, this is the bar that's going to flip the ATR over. So this would essentially become our signal bar. Most cases I would end up entering down here. But let's see, we'll turn on the swing high perhaps for our stop. Oh, that's way up there. Let's go with something else. There we go. We'll go with the 3-period ATR. Now the beauty of this tool here, the Trade Manager, and I'll show it to you on the Hawk because it'll be a little bit more dramatic, is it controls your risk exposure. So you can see right now I have my risk dialed down to 2%. That means no matter how I set my stops, I will only risk 2% of my trading capital. So notice the risk amount, $330. If I place my stops a little further away, let's say up here, oh, look at that, $330. If I choose a stop maybe even further away still, I can go a little bit further, one sec. Oh, still about $330. This is very, very significant. Most people don't understand. Most people think that they got to run a really tight stop, right? They got to throw their stop in ultra tight. But what happens is if there's even the slightest reversal, the market will stop them out, right? And then you end up taking a loss before the market gets a chance to get to your profit target, because inevitably what happens, the market comes up, stops you out, and then goes to your profit objective. So the Trade Manager allows you, will always maintain your risk amount at 2% or whatever you set. It will always cap your risk amount so you never ever overexpose yourself. So don't freak out if you see these, $300 amount here. That's what my risk amount is. That's what 2% of my capital is. I was working with a fellow, he was trading a $300,000 account. We were only risking 0.25% of his trading capital. All right, so we're back down now at all this mucho support right down here. Let's take a look at what's going on with the Geiger counter. If the Geiger counter is giving us a clue here, there's the buyers coming in. Come on, sellers. Oh, no, it's still waffling back and forth. So we might see a little bit of a reaction here as we get down to the lows of the morning. Okay, and now another first micro-macro cross signal, right? Everything is in sync now. I've got the warning dot. Oops, signal just printed. Let's see if I can take advantage of that one. And here again, you know, I'm allowing myself a little bit more room. And what I'll do too is to try to demonstrate the trade manager. If it engages us here, I will delete the profit target. Oh, I almost forgot regarding add-ons. There's also the Day Ranger tool. The Day Ranger gives you an idea as to the market's current range relative to its average daily range. And here we're going to adjust the signal a little bit. Take advantage of the macro pullback signal that's building. So you can see our average 30-day range about 240 ticks, our 10-day range 190, 5-day range 185. Oh, into yellow bars. So that tells me the market is actually contracting a little bit on average. Yesterday was 204, today's 106. So that tells me there's probably still about 80 ticks to be had. Oh, now we're into a green bar sell. Green bars, red dot is going to produce a sell signal. I'll be looking here for a test of the extreme or perhaps a resumption of the downtrend. A little bit more aggressive. So how can you use the Day Ranger? Well, if you know, for instance, that say the average range, you're going to saw it off at 200 ticks. And let's say you wanted to take 20% as a profit objective, 20% of the daily range as a profit objective. You would have a 40 tick target that day. And let's say you wanted to offer up 15% of the daily range as a stop loss. So in that case, you would run a 15 tick stop based on what the market's daily range has been. Right? So the more volatile the market becomes, perhaps the more aggressive you can be on your profit targets, the more conservative you'll need to be on your stop losses. And now we've lost that signal, so we'll nix that. And vice versa, when the market is contracting, you can expect the ranges to be a little bit tighter, so maybe you'll take profits on target, or perhaps even a little bit early. You can probably run your stops a little bit tighter because there's less volatility, and so on. But do you need the Day Ranger? No. So now we're into scalp mode here on the trade forecaster for a half an hour, it says, and then we're back into swing mode. I'm going to roll my stop here to the stop strategy. We're testing the hard edge now of the Eagle Band. Come on, give me that reaction. No, there they go. They're going to tag me here in just a second. There. Hold my stop. So here's the hard edge. We always anticipate some sort of reaction as we enter or encounter the hard edge. The bar is a little bit thin here on this rally. There's not a lot of participation to the upside. I hope that they stay far enough away from my stop. All right, well, let's see if there's something else I can show you. The Raptor into a possible double pullback. We'll see. Oh, and here now the hawk, or pardon me, yeah, sorry, the hawk is coming into another first micro macro cross. We haven't had a test of the extreme here. That's the problem with this particular trade. It just tripped. Let's see if we can get a macro pullback that I can take advantage of there. Again, yellow bars. See all these yellow bars, and they're printing at more or less the same latitude. That tells you that we've got a market that's in a little bit of congestion. Jason says he's got no audio. Does anybody else having trouble? Well, you won't hear me. Can I get an audio test? Can somebody please? Okay, thanks. All right. Couple questions here. Oh, darn, they did slip high enough. That's right. We'll get another chance here in a moment. Again, the signals are kind of waffling a little bit here. I got a question here from Deb. Does the trading platform come with the software? Meaning, where do I send funds for this? Okay, you would send the funds to your broker, and you would need the NinjaTrader software. People have asked, why don't you develop it for MetaTrader or TradeStation? Truth be told, the other trading platforms are not robust enough. Their programming is not complex enough to handle all the functions that DTS is doing here. So you open up an account with your broker. The easiest way to do it is through the NinjaTrader brokerage. That way it's all seamless. You get your NinjaTrader software, you put your DTS trading system on it, and away you go. You're all set to trade. Now, when you do begin trading live with NinjaTrader, you will owe them for their trading software. But until you start trading with the NinjaTrader software, it's free to use. You do need to provide a data feed, which you would arrange through the broker. Igor asks or comments, looks like a pretty complex and somewhat discretionary system. No, not really. I know at first blush it looks a little complicated. It's because there's a lot of arrows and things going on, colors changing, filters and whatnot. But really, it's not that bad. Like I say, we're really just looking for a few setups. So for instance, here on the Hawk, and I've shown you the cheat sheet, we've got the first micro macro cross. We've got the macro pullback. We have the 4 arrow consolidation, right? And all these things developed rather quickly. Here on the upside, this is what a first micro macro cross looks like. Even with the Hawk, if you just wanted to hold out for your first micro macro cross signals and do nothing else, because those are your highest probability signals, you would probably do okay. You know, there's a first micro macro cross there. There's a first micro macro cross signal here. Oh, here's one that actually failed, or I think it failed. Hold on a second. So you took a little bit of heat, got a macro pullback signal. The macro pullback signal worked out. Let's see if that actually reached your high probability target. Oh, it just kissed the target. Did it get lower? No. You would have hit your break-even trigger. I'm not sure you would have actually taken profit on this particular trade. But hey, break-even's not so bad. Another first micro-macro cross signal. So it's not that difficult. You see, if we're into yellow bars, I ignore the yellow bars entirely. I don't even look at those. So if you just concentrate on your high probability signals, it's not too bad. Let's take a look at the Falcon. I know I've been spending a lot of time with the Hawk this morning. With the Falcon, your high probability signals are your trend change signals. Well, I think we've only had the one, this one right here. And this is because this is a a swing trading tool. Trend change signal occurs when the trend line changes color from green to red. It's essentially the first signal that comes into sync. So we've got red trend line, red bars, red signal, red filter. Here's a trend change signal to the upside. So trend line changes color. We get this little up, down, up pattern. There's the signal. And you can see, very good result. Here is a trend change signal to the downside. So the market flip-flopping a little bit yesterday. Here's a trend change signal which developed rather late. Took a little bit of heat on it, but eventually got to your target. Don't know what happened with that bar. That's very unusual. Here's another trend change signal. So you see, if you're waiting for or if you just focus on finding the high probability signals, it's not really like trying to find a needle in a haystack. Yes, you know, it's producing some signals here. We're just ignoring those until we get the setup we want. So now we're working on a trend change signal to the upside. See, the trend line has changed color, right? It's gone from red to green. The market has moved up. Here are the sellers trying to regain the market. If we come back now with green bars and a green signal and everything remains in sync, that will be a buy signal for us. But you can see we're waffling quite a bit here. The trend line keeps flipping back and forth. The filter keeps flipping back and forth. Not the best day for examples. Same thing now on the Eagle. Let me find you a high probability signal on the Eagle right here. Red bar buy signal. Into the hard edge, comes out with a red bar buy. The trend change signal. When the cloud changes direction, it's your first signal again where everything is in sync. Most of the time, that's what you're looking for, is you're looking for everything to be in sync. Here's a trend change signal. Yes, you took a little bit of heat. Look, developed into a red bar buy, and then look at that follow through. So it's not really as discretionary as you might think. Here's a green bar sell. This is the opposite of the red bar buy. This is what happens in a downtrend. Let's get back here to where the clouds cross over. So the cloud crosses over. Here's your first with trend signal. Yes, you took a little bit of heat, but it eventually got you there. Look at this, several red bar buy signals. All right, so like I say, it's not quite as discretionary as it may seem on the surface. We're not looking at all these other signals. I was just focusing on those, the high probability ones. And if we take a look here at the Raptor, we'll have a similar outlook. And again, the Raptor's been a little bit quiet today. Here's our trend change signal, our cloud crossover. Came a little bit late. Oops. All right, let me get this over here to yesterday. Another cloud crossover signal right here. You can see that had a little bit of follow through to it. Hard edge bounce. This is actually what we call a double pullback. So it moves twice into the cloud, comes out of the hard edge, produces a buy signal. That's one of our high probability signals on the Raptor. I'm going to delete this here for just a second. There we go. Another cloud crossover. Clouds crossover, generate a signal. It didn't matter which one you took, this one or this one. They're practically the same. Let's see if I can find a failure signal for you. See, here's another double pullback. The market comes out. So I'm not really paying attention to these extra signals that are all printing here. You see that? I'm focusing on the high probability signal. Another double pullback. And here's the signal. Oh, this one came a little bit late. That's a shame. I was looking for a counter trend signal to show you. The counter trend signal will always be preceded by the test of the extreme and the subsequent failure. Typically, the signal prints right about here, and we would look for a retracement into the hard edge. All right, well, we'll put that back on the shelf now. It's not a black box system. I always get people asking about a black box system. But, you know, I'm of the opinion that it's my money. If I'm going to make a mistake, I don't want a computer making a mistake for me. I suppose I was watching too much of that Terminator stuff. Oh, shoot, I just missed the crude inventory report. Sorry, guys. Here's crude oil. Let's take a look at crude on the Falcon. Actually, it doesn't look like we missed very much. We could probably still bracket this market. We'll use an OCO order. We'll buy above here, sell below here. May have been a good thing that we weren't there right at inventory release. So the trade manager also has an OCO function. One cancels other. Very quiet for crude. We've got quite the range established here. Remember, when you use your OCO function, these orders are live the moment you put them on your chart. Yeah, Tony's asking what's gas costing per liter. Oh, they were very nice. They just hiked it 10 cents yesterday, 10 cents a liter. Funny how when crude prices go down $10, they only drop it 2 cents at the pump. And if crude goes up 50 cents or a buck, they hike it, 10 cents right away. And by funny, I don't mean funny. Chris asked a good question here. And yes, Tony, I'll get to your question here in just a moment. Chris asked, why don't you have just one tool for all the markets? Well, my grandfather always used to say, if the only tool you have is a hammer, then every problem tends to look like a nail. I don't know if you were in the room, Chris, when I mentioned this before, but you know, if whatever trading system you're using right now, let's say you're using a moving average crossover system or whatever, you know how it works great some days, but it doesn't work worth a darn other days. What's changed? Has your moving average crossover system changed? Nope. What's changed? The market environment, the underlying market conditions have changed. So that's why we have three tools. We have a scalping tool, a swing trading tool, and a trend trading tool. Now the Raptor is an attempt to blend all three. The Raptor, like I said, is a hybrid. It incorporates elements of the Hawk scalper, the Falcon swing trader, and the Eagle trend trader all into one. And that was again in response to people like you asking, well, I don't want to follow three charts, I just want to follow one chart. Okay, there you go. There's the Raptor. Now, like I said, the Raptor is sort of like a hybrid car. You know, if you have I always use the example of a Prius and a Corvette. Both are cars, both will get you from A to B, but both do it differently. A Prius is not a Corvette, and a Corvette is not a Prius. They each have their advantages and disadvantages. So, but the Prius is a hybrid, right? It's part electric, part gas. Will it get you to your destination? Absolutely. Will it do it as quickly as a Corvette? Absolutely not. So the Corvette is more like a specialized tool. So you have three different hammers with DTS instead of just one hammer. And crude oil looks like it's pretty content to stay within this $47 range. $47, $48. So not too much coming out of the crude inventory report, it appears. We'll stay with this for just a moment. It looks like it may try to break lower here. We haven't produced a trend change signal or anything yet. Trend line has changed color. Oh, here we go. We're working on a trend change signal. And so notice my other order disappeared. I've got a stop in play now according to the stop strategy I've selected. And now we're watching the crude traders try to slug it out. Come on, crude. Yeah, Tony, you're right. Tony says, first time in a long time, crude's actually reached either side of the OCO order, and that's true. So I'm just going to cancel that break-even trigger. We'll see if we can't sneak this one a little bit lower. We'll try to let you see how the trade manager is going to roll those stops for us. Yeah, battle of the bots. You could be right there, David. And David's referring to the trading computers. So long as we're on the right side, it doesn't really matter who's trading. Now, Tony was asking, good morning, Eric. When time permits, would you re-explain how to interpret the tails on the bars? Well, quite simply, the tails give us a short-term directional bias. We know that there's a lot of buying pressure here off of this primary support. How do I know? Well, the market has come down, slowed, we get a little bit of an uptick here, then the sellers try to recapture it, and then the buyers really push hard. Right? So the market tried to head lower, and it ended up closing higher. You see how I'm getting tails or wicks now on these bars here? This tells me that there was some buying pressure here. So if I wanted to be more aggressive with my stop, I could roll above there, knowing that the buyers are prepared to step in at those particular prices. And if they don't step in, well, then the market is likely to go much higher still, probably to the next wick, the major wick. You're going to notice that almost all reversal points, this is something on the Raptor, for those of you trading the Raptor, if you get a wick followed by a tail, you can almost be assured of a rally. And if you get a tail followed by a wick, you can almost be assured of a decline. It's always going to occur that way because this is where the market, one side of the market loses control to the other side. Right? So the sellers had control. Sellers have control. Oh, buyers making their presence felt. Sellers have control. Oh, buyers making their presence felt. Sellers have control. Oh, buyers take control. Notice here, the sellers try to fight the market down. Market comes right back up. And then notice these bars. No wicks or tails. Full control on the part of the buyers until all of a sudden the sellers show up. Buyers take control. Sellers show up, keep control. Buyers come back. Sellers come back, and so on. So you always get that waffle effect going on. See these bars right here? No wicks or tails. That tells me the sellers have total control so far. All right, let's nurse our crude oil trade. See, look at the wick on this one here. Buyers getting very aggressive. They're saying, nope, this is low enough, 4,700. We're not going to stand for this. 4,700, sorry, $47 a barrel. We're not standing for that. We're going to buy it up. That's a good price. And the sellers say, no, it's not. And they maintain control. So I might go with the parabolics now. They're a little bit more aggressive. We'll snap the trade to break even. And we'll see if the parabolics can't nurse this a little lower. How are we doing so far? Oh, not bad. You know, at the end of the day, you should always let this figure right here be the deciding factor. Igor asks, how do I know which signal is which? Is there a legend to the signals? Well, yes, there's information that comes with the tools. We've got a cheat sheet for the hawk, which tends to be the most, for whatever reason, most confusing to people. And I don't mean confusing. Most people pick it up within a few days, quite honestly. I'll tell you, when Adam first launched Indicator Warehouse and we had the trading room and whatnot, after a couple of months, people weren't showing up to the trading room anymore. And Adam, of course, did some follow-up, called people, asked, why aren't you coming to the trading room anymore? And people essentially told them, I get it, I got it. If you wanted me to hang out in the trading room, you should have made it more difficult to understand. Now, we still get people coming to the trading room, but it's more, I think, for the camaraderie. And we do have trading rooms for owners also. So as a DTS owner, there's the daily trading room. You can come in, you can ask questions, you can see how the tools work. I go over this stuff every day. And hopefully, if the markets cooperate, we can even pick up a decent trade here and there. Okay, so we're getting a lot of buying pressure coming back in here now. I'm going to leave the stop where it is, but if you're in this trade, you may not want to allow it to trade above 47.08. If this bar finishes green, it's very likely going to try to run our break even. There we go. So they're going to tap me here, or try to tap me on break even. So my stop just above the wick of this bar, and we know there was very strong selling pressure here. We know there's very strong buying pressure down here. Oh, sellers got to show up in a hurry now. I should have put the Geiger counter on here so you could see it. Just 1 second. If I'm not too late. Okay, so here's crude oil on the Raptor, where I happen to have my Geiger counter low. Look at how the buyers are just chewing through those orders. Oh, here come the sellers. They're holding their own. Oh, what a tug of war. I really want to see this dial hard on the right side here, just like that. No, the buyers are going to be a little bit too strong here. Unless the sellers step up in a hurry. Oh, Phil, you're quite the comedian. I had no idea you were following our politics here, Phil. Phil says he also tunes in to, oh darn, we did get stopped at break even, so the buyers were a little bit too strong there. Yes, Phil tunes in to find out what's going on here in Trudeau land. For those of you who don't know, our new Prime Minister is Justin Trudeau, and his father was Prime Minister back in the 70s, so it's deja vu all over again, as they say. James is asking, can you explain parabolics? Absolutely, James. Here, let's take a look at parabolics on the Hawk, where we're producing a first micro-macro cross signal. So parabolics are one of our stop strategies. Parabolics were actually developed by Wells Wilder. He's a brilliant mathematician. I'm not sure he actually trades, but he's designed several trading tools, RSI, parabolics. What else has he done? He's done a few. Okay, we're into a macro pullback signal here, so we're going to set this up like so. Now, what parabolics are, you're going to see that the parabolics, when the trend first develops, or when the signal first develops, parabolics are very, very loose. And then as the momentum starts to die, parabolics get very aggressive, and they jam that stop strategy in very tight. That's why I like using parabolics if I've got a fair amount of open profit. So had I taken, say, this first micro-macro cross signal right here, my initial stop could have been here, and then you see as the momentum of the trend starts to wane, the parabolics get in very tight and they protect a lot of my open profit. The only stop strategy more aggressive than parabolics is the bar high-low. And you can adjust this to however you like. So it will keep the stop 2 bars back, 2 ticks off the high or low, and it will take you out at the first sign of weakness in your trend. Parabolics can also be used as an entry system. We use them as a stop system, but some people like to use it as an entry system. Essentially, it's the kind of system that keeps you in the market all the time. And as such, you probably need another type of filter so that you're not doing this kind of thing. So whenever the price would cross parabolics, in this case, you would buy right here, and then you would sell right here. You would buy right here. You would sell right here. Now you can see out of these 3 trades, or 4 trades, 3 of them were maybe break even at best, or maybe even a small loss. It wasn't until you hit this one here that you actually picked up some open profit. So for that reason, parabolics, like I say, you may want to have another type of filter if you're going to use parabolics as an entry to avoid these kind of whipsaw type situations. But we're using parabolics as a stop strategy. Rather than an entry system. All right, anything else going on here? Possible trend change brewing on the Falcon. Oh, we got a hard edge bounce here on the Raptor here. We got nothing else going on. We might as well follow this. Now, I'm going to show you this tool is slightly different. Ooh. All right, there we go. This tool is slightly different than the Trade Manager. This one is called the Trailblazer. And you noticed all I had to do to enter the order was hit the buy or sell market buttons. I can also enter an order manually by placing a buy order or sell order like that by right-clicking on the chart. But this was developed again in response to owners saying, you know, I love the Trade Manager, but sometimes if the market moves too fast, you know, I got to go click, I got to go click, I got to go click to submit the order. It's too many clicks. Can you give me a one-click system? Well, that's how the Trailblazer originated. And again, I just happen to have the Trailblazer here on the Raptor. You can use it on any of the tools. Okay, just because I'm featuring some of these things on some of these particular birds, that does not mean you cannot use the Trailblazer, say, on the Hawk, or that you cannot use the Trade Manager on the Raptor. Of course you can. All right, so I've got my stop in place. I've got my stop strategy in place. We're just about to hit the break-even trigger. Come on, get down there just a little more. There, so we're at break-even. We'll see if we can't take profit on one of our contracts now as we hit the lows. Come on, get down there. Take out those lows. Come on. Oh, don't you dare flinch again on the low. All right, they're trying here. Yeah, Igor says I use ATR as an entry system, and that's fine. You know, like I said, the chief advantage of using a system like DTS is that you have a tool for every condition. So the market heading a little bit lower now. Here, I'll show you the parabolics again. So see how loose the parabolics are here to start? Even though price is way down here, and we have what? We've got just over $120, $130 in open profit. As this trend begins to wane and lose some momentum, the parabolics will come in much faster and try to protect some of that open profit. Of course, you don't need to stay with the parabolics. You can use whatever system you like. You've got 16 of them after all. You can choose whatever tickles your fancy. That just happens to be my preference, the parabolic, or perhaps the bar high low. We'll see here if we start getting a substantial profit. I may switch to the bar high low system because it's even more aggressive than the parabolics. Okay, we got a little bit of a breakdown here. So where is the next stop? Okay, so there's 4,700. Oh, I said 4,690. That was going to be a probable target, wasn't it? Okay, if we can get through 4,700, 4,690 is the next stop. And in fact, I'll even throw in a profit-taking order. There. Oh, providing we don't get too much of a hiccup here. Come on, sellers, where'd you go? I know you're around here somewhere. Well, there was major support here. Look, we bounced 1, 2, 3 times. This could be this is definitely the fourth attempt to bounce the market off this 4,700 region. Here we go. Come on. Oh, come on. Steve's asking, does this system work on the Thinkorswim platform? No, Steve. Unfortunately, Ninja is the only software robust enough to handle the programming. There is some extremely complicated programming going on behind here, especially for the trade manager. Even the DTS tools, though, what you see here is really a stripped down version of what's going on behind the scenes. There's about a half a dozen parameters that have to be met just to get a warning dot to print. And some of those are based on momentum, some are based on price activity. It's actually very complicated software. And then this whole trade manager type deal, this is very sophisticated. In fact, Adam likes to boast the fellow who did the programming for this. He also programs missile guidance systems for the US government. No joke, he programs cruise missiles. So this programming is very, very tight. Okay, so we're below 4,700 now. Next stop I said was 4,690. We'll see if we can't get them to go. Come on. You know you want to. And again, you know, at the end of the day, this number right here should determine whether or not you're going to hit your close button. Always let your pocketbook be your guide. So far, Parabolic's doing a pretty good job holding me in. If this bar closes lower, I'm going to switch to the bar high-low so you can see what that looks like. Come on. I need one more bar to close lower because the bar high-low, there we go. The bar high-low is very, very aggressive. It's going to take me out on the very first sign of weakness. So you can see we're only, in this case, 2 bars back. Oh, I got a negative offset. There we go. Let's give it a 2-tick offset. So that's all I'm going to give it. And they're going to tap me here in just a second. See, the dial is hard over here. A lot of buying at this level. It's 11,4,700. Buyers trying really hard to defend it. Oh, look at that. Come on, sellers. Chew through those orders. Nope, the buyers are going to take it here in a moment. All right, you guys, it's the top of the hour. Yeah, like David says about Anthony the programmer, he's a true rocket scientist. Yeah, he is. He knows his way around code, though, I'll tell you that. If anybody has any other questions or comments or anything you would like to see, type quickly. Otherwise, we're going to button up the room here this morning. And I will thank you for your attendance today. I hope that you found it interesting, maybe even a little educational. DTS owners, I will see you in the trading room again tomorrow morning. If you are trading this afternoon, they did give me a little bit of a hop there. I think 46.90 probable target, folks. So I would look more for selling opportunities than buying opportunities. The buyers are doing their darndest to buy it back up. Okay, have yourselves a wonderful day. Remember, next Wednesday we will have another open house. And again, DTS owners, I'll catch you tomorrow morning. Talk to you soon. Bye for now.